Right. Very good afternoon to you one and all.
Good afternoon, sir.
Yeah, today we are going to discuss uh, public revenue, sources and classifications of public revenue. We are going to discuss now. In this module, we are going to discuss the taxes, different taxes, types of taxes, direct and indirect taxes. What are the sources of public revenue? Okay, so this is very important topic for your examination point of view also. Here,
Which
as
block, sir?
yes,
Which block? First block or topic?
public revenue. Just you listen first. Okay, try to
Okay.
listen. Uh, module two, I think. Yeah, module two, unit two. Okay. Uh, Here, generally, when we talk about the revenue, okay, there are several sources are there, particularly for a government. They can collect the revenue with the help of various sources. Because, according to uh, Dalton, he distinguished the concept of public receipt as a public income and public revenue. So public income is a broad sense when we look into this word public income, all the receipts, while particularly the narrow sense, it includes only the receipts which are commonly attributed or collected through the taxes and fees. Okay, these receipts increase the assets of the government without any increasing liabilities. So here, when we are talking about the taxes, it can be again divided into two. One is direct taxes, and the another one is indirect taxes. Both these two taxes having merits and demerits when we talk about the direct and indirect taxes. Yeah, sorry, due to technical issue. Right. So taxes are two types. One is direct tax, expenditure tax, corporation tax, which comes under the direct taxes. The indirect taxes, like customs duties, excise duties, sales tax, which comes under the indirect tax. So here, uh, what are the significance of public revenue? Generally, when we observe the modern times, public revenue is generated from various sources, as I said. There are various sources to get the uh, income, particularly for the government. Public is nothing but uh, public is nothing but government. So here, public revenue, government revenue, how it is generating, we are going to. There are various sources, as I said. One is, taxes, direct and indirect taxes. The another sources of collecting the revenue of public is fines, which are imposed by the government, particularly for the offenders. Okay, this is one of the way to collect the revenue, and also compulsory loans and tributes and which comes particularly arising out of the war or sometimes the other reasons, and also income which is generated from the public, such as a lease of government lands. That time also it is generating this of the public enterprises, the profit share through the government is collecting the direct indirectly, and the fees for the services which are rendered the government. Receipts from the and some voluntarily gift government. So generally, the public revenue, which is classified into tax revenue and non-tax revenue. The public revenue, particularly public is nothing but government revenue. Okay, it is classified into two categories. One is tax revenue. The another one is non-tax revenue. Tax revenue, which is derived from the two important sources. One is direct taxes, the another indirect taxes. So government is collecting through these two sources. And for the indirect direct taxes, as we know, income tax, expenditure tax, wealth tax comes under the direct. Customs duties and comes under the indirect taxes. So here, the government revenue from the taxes and non-tax sources also there. These non-sources taxes, which may be fees, fines, sometimes prices, gift, HAs, this all are comes under the non-tax revenue sources. Okay, so when we are talking about the classification of revenue, there are various economist has given various classifications of public revenue. One of the important classification is Adam Smith's classification. Here in this Adam Smith classification, public revenue divided into two categories. One is income, which is derived from the state property. The another income derived from the public. So in the first category, as I said, income derived from the state property. So here we may have to know the revenue from the public sector undertaking while the the second category. So revenue which is received from the taxes, Adam Smith, he did not give much importance to the role of state and expenditure. The another classification related to the public revenue is that Dalton's classification. Dalton classification of public revenue. Here, Dalton has classified the public revenue into 12 main categories, particularly taxes, tribute and indemnities, whether arising out of the war or otherwise forced loans which were prevalent in olden days. That also comes under Dalton's classification, and also receipts from the public property, fees, or we can say payments which are made for the services. Okay, and also uh, receipts from the voluntary public loans, receipts from those industries where the government charges monopoly prices. So the receipts from the social assessment, receipts from the use of printing, which all are comes under the Dalton's classification. Voluntary gifts also comes under the Dalton's classification. So after giving the this Dalton's view, Dalton felt that most of the cases the distribution is not clear because one kind of revenue overlapping gradually into the another. So there is a drawback uh, related to classification of Dalton's public revenue. Seligman also has classified three uh, categories, particularly related to public revenue. So one is gracious revenue, contractual revenue, compulsory revenue. Seligman has classified into three: gracious revenue, contractual revenue, and compulsory revenue. So here the gracious revenue, which consisting of gifts, donations, comes under the gracious revenue. So which state does not directly, or institution or individual that does not pay. So the importance of this kind of income has considerably reduced in recent times due to various reasons. So there is no obligation in the part of state to provide, sometimes we call it as for service. The second one is contractual revenue. Contractual revenue. Here, the contractual revenue, which includes the revenue generated from the sometimes rent, sales proceeds from the goods and services which are sold by the state or public. So the state government or state owns the property in the form of land, buildings, which are normally lease contractual. So similarly, when we are talking about the sale of goods which are produced by the government, particularly like the services provided by the government, like revenue, railways, post offices, which provide the state with certain revenue. So all this type of contractual incomes, okay, Seligman he call the prices related to all these. Seligman calls them as a prices. So However, when we are talking about the modern welfare state, the precise such as public utilities, the matter of controversy, and like the private goods determined by market mechanism. Coming to the another one, that is compulsory revenue. The third category is related to compulsory revenue. Broadly, when we talk about the compulsory revenue, taxes, fees, fines, special assessment, this comes under the compulsory revenue. Okay, so here the state has the power of eminent or a domain with respect to the property of its citizens if it is necessary. Here, when we are talking about the seligman, he has defined certain important items which are included in the compulsory category. So, as I said, fees, taxes, special assessment which comes under the special category. So, fees, here the fee is a payment to defray the cost of each recurring services which are undertaken by the government, primarily in public interest, uh, conferring the measurable special advantage of the fee payer. Taxes, the tax is a compulsory payment by the people to the government, particularly to defray the expenses incurred by the provision of public goods and services. Special assessment also there, which is payment made once for the all the defray of the cost of particularly improvement of the property. So as there are various definitions are there related to public revenue, or simply as I said, public, the government need to income for the performance of their variety of functions, as we know that, right? So to meet their expenditures, government has to collect some amount of money with the help of various sources. So the public revenue, the income of the governments, there are various sources. As I said, sources of public revenue, which are various sources. So this public finance, this public revenue, one of the branches of public finance. Okay, there are income of the government through the various sources. We characterize public revenue. What is public revenue? The income of the government through all the sources is known as public revenue or public income. Okay. So public revenue, public receipts. There is a differentiation between the public revenue and public receipts. Public revenue, which includes the income, which is not subject to repayment of the government. Public receipts, which includes all the income of the government, including public borrowings, the issue of new currency, which comes under the receipts. So public receipt, simply we can say that public revenue plus public borrowing and issue of new currency comes under the public revenue. So as I said, no sources of public revenue. Again, just we are recollecting sources of public revenue. The sources of public revenue can be classified into two, as I said, tax and non-tax sources. So tax sources, which are imposed by the government on the people or public, It is compulsory on the part of the citizens to pay the taxes without any expecting return. Without any, if you are paying direct tax means on your income means we cannot expect anything from the government tax from the income. Okay. Again, when we talk about the revenue from taxes, they came into three main sources. We can say that taxes on income, taxes on wealth property, taxes on commodities, and these three. So when we talk about the characteristics of tax, it is compulsory payment to the uh, government from the citizen. Each individual has to pay irrespective of caste, irrespective of color, age group, they have to pay the tax. So the another characteristic of tax, it is imposes as a personal obligation. What does it mean? It is the duty to taxpayer to pay and should not be in any case thing to evade it. So the absence of direct tax or direct benefit to the between state and people, the taxpayer do get any advantage from the public authorities, but no taxpayer can claim the direct benefit as a matter of right. That you have to remember. Certain taxes, particularly, which are imposed on specific objectives. For example, tax on petrol to reduce the consumption and tax on luxuries to divert the resources for the production of some other essential commodities. Certain taxes are no, there is no tax without representation. This means the proposals which are related to the taxes which are sanctioned in respect to assembly are elected representatives. Non-tax revenue also there, as I said, commercial revenue, income from the public property and enterprises. Administrative revenue which is generated from the fees, non-tax revenue, fees, fines, revenue. So talking about the commercial revenue, as I said, the income which is earned by the public enterprises by selling their goods and services. Okay. For example, payment of postage, tolls, interest on particularly when they borrow the funds, they are known as prices because they came in the form of prices of goods and services provided by the government. So this revenue is commercial revenue. Administrative revenue, which are fees, fines, special assessment, as I say. So here the receipts of the income which occurred on an account of performing the administrative functions by the government, we call it as administrative revenue. The important items in this administrative revenue, like fees. Fee is a payment, particularly to defray the cost of each recurring service taken by the government in the public. These fees are this imposed fees, license fees, passport fee, revenue for the government. Fines and penalties also comes under the non-tax revenue. So fines, penalties, which are imposed on persons, particularly for the punishment of against the law. They are imposed to prevent the crime, as we know that these fines and penalties are uh, particularly under the non-tax revenue. That you have to remember. Special assessment also comes under the non-tax revenue. As Seligman pointed out that this special assessment, which is compulsory, levied based on the special benefit which are derived from the cost of a specific improvement to the property. Okay, and also gifts and grants comes under the non-tax revenue. In generally, when we are talking about gifts and grants, these are the payments which are made by the government to another for some specific function. For example, when we talk about the central grant, which is giving to the states. Central grant is giving to the state government, contributing particularly government for some special purpose. Sources also there to generate the revenue. Other sources, like H8 and which are issuing currency and buying borrowings. So here, these properties having no legal heirs or without will. Okay, that directly a government can collect that property. We call it as H8s, issue of currency, printing of paper money. That yields generating the income to the government, right? So here, what does it mean? It creating the extra resources by printing the paper currency. So generally, it avoided because once it's very difficult to stop this situation. So further, it leads to increase the prices of the goods that causes for the inflation, right? Prices will increase when the currency or printing is more. What does it mean? Money supply is more. And also the borrowings. This is another source of public revenue. Through the borrowings also the public, from the public, okay? Like deposit, bonds, which includes external borrowings, comes under the borrowings. These are the comes under the non-sources of revenue. Coming to the taxes, as I said, taxes are divided into two, direct and indirect. At the same time, on the basis of their rate schedule, okay, on the basis of their schedule, these taxes are divided into four. One is proportional tax. Another one is progressive tax. Third one is regressive taxation. And fourth one is digressive tax. If the tax rate is increases as the tax base increase, then it is called as progressive. Tax rate is increasing due to increase the tax base. So that we call it as progressive tax. When income increases, tax rate also increases. If the tax rate is constant, okay, as the tax base increases, then it is known as proportional taxation. Regressive tax means the tax rate which is declines as tax base increases. That is regressive tax. If the tax rate progressively declines, continuously declines, or becomes constant after certain level, then we the tax base with the respect to tax base, the base automatically that becomes we known as regressive tax. Regressive tax. Simply the proportional taxation. Under this type of taxation, the tax rate is constant as the tax base increases. Okay, that is proportional tax. Progressive taxation, if the tax rate is increases as the tax base increase, it is called as progressive taxation. Regressive taxation. Then the last one is degressive taxation. This tax structure is particularly applicable only a few selected taxes. Under this degressive taxation system, the tax rate is progressive until a particular level of tax base is, or later it becomes constant. So under this taxation structure, particularly the richer sections of the society do not make sacrifices by paying taxes which are expected. Coming to the canons of taxation, the impact, incidents, effects of taxation. There are different canons of taxation, particularly the canon of taxation, which was originally laid down by the Adam Smith in his famous book, An Inquiry into the Nature and Causes of Wealth of Nations. Simply, we can say Wealth of Nations. So in his book, he has given or he gave only 4 canons of taxation. These are called as main canons. These are called as main canons of taxation. The government is planning and that becomes more complex. Adam Smith, according to Adam Smith canons of taxation, he has said 4 different canons of taxation, as I said. First one is canon of equity. Second one is canon of certainty, canon of convenience, and canon of economy, according to Adam Smith canons of taxation. So canon of economy or equity, canon of equity. So according to him, the subject of every state that contributes towards the to support the government as rarely as possible. We can say that the proportion of their respective liabilities or abilities, we can say that. Okay, the government collects taxes from the public. The amount which is spent on various items like expenditure on certain provided services to the public. So here the government is collecting the revenue and spending that amount with various activities purpose, social services. There, when we talk about the another one is canon of certainty. This canon kind of certainty of repayment or the time of payment, the amount to be paid, sort of it clearly, the play or contribute to the every person or individual person. So here, when we are talking about the Indian case, the Indian tax system has been, criticized as confused the containment in many exemptions, particularly the process which has raised a lot of scope for the officials to be corrupt. There is a high chance to corrupt. So here, many factors that may be, uncertain the situation in many times, like, when we observe the tax laws amended frequently, which include the new tax system, the changes in the existing tax rates, and the new exemptions, and the withdrawals of, existing. So this comes under the canon of certainty. The another one is canon of convenience. According to the, Adam Smith, third one is canon of convenience. So here, the third canon of convenience, every tax should be, levied at the time of the where it is most likely to be convenient to the contributor to pay it, easy to pay. So it implies that, the time and the method of tax payment should be convenient to the taxpayers. The word itself is showing, right? So it is easy to pay according to the convenient of the taxpayer. So this maybe takes on the interest of the taxpayer about the payment according to their tax into the consideration. The fourth one is canon of economy. As I pointed out that, according to the Adam Smith, fourth one is canon of economy. Every tax should be, contributed both, to take out and keep out of the pockets. What does it mean? The people, as as little possible over the uh, uh, taxes. So what does it mean? This means that the amount of tax that it should be, minimal cost that collected and should be, lower than the revenue which is generated or received or raised. In other words, we can say that, the difference between the revenue which is generated in the form of tax, what government receives after the, all the expenses which the taxes should be, meager. Other economists also, they have, given the canons of taxation. When we now observe the another fifth canon of taxation is canon of productivity. Canon of productivity. The canon of productivity, which was given by Bastel, a classical economist, it is also known as the canon of fiscal adequacy. So according to this canon of productivity, the taxes must be, levied in order to accumulate the satisfactory amount, particularly for the government, and it runs its administration effectively. So the government, they try to raise adequate revenue to meet the expenditures that, particularly to provide enough facilities to the public or for the people. Okay, that is related to, canon of productivity. Canon of elasticity. the canon of elasticity, it states that, the taxes should be elastic in nature. The amount which is, collected in the form of taxes, that can be, decreased or increased. It is depending on the requirement of the government. When the government impose more tax, when they think they want to, collect more revenue, then they impose more. Decreases also. So the tax in the form of taxes, that may be increase or decrease. It is depending on the requirement for the government. So elasticity, it may be, fluctuate, changes, right? So in the interest of the development of the country, when the country faces, adverse conditions like natural, sometimes it happens, natural calamities, wars, which all are, comes under the, government at that time, particularly generate more revenue to overcome these issues, right? So at the same time, the tax that should be, adaptable to the changes in the financial requirements to the government. So generally, when we, talk about the government expenditures, that increase every year, as Wagner's law of public expenditure, increasing state activities. What does it mean? According to him, the public expenditure increases continuously in a smooth manner, right? So here the public expenditure is increasing year and year by year. It is every year it is increasing. So the same situation when we are talking about this tax also should be elastic enough to increase the revenue in the case of, to need and also revisable. It depends on the, demand. If the government requires more funds, it can be increase its revenue from some taxes through the taxes without any incurring an additional cost which is collected. So reduce the incentives to the production, right? So this, when we observe in Indian case, the income tax is, good example for the canon of elasticity. Canon of elasticity. Because this income tax is best example for the canon of elasticity. The government can, increase the revenue. It depends on their income levels. When income increases, this tax rates also increases. So service tax also more elastic because it is, a coverage, the rate and revenue, particularly when they're growing the, from the revenue side. So this is related to the canon of elasticity. The another one is canon of diversity. Another one is canon of diversity. Here, the canon of diversity, particularly, it is, multiple tax system. We can say that. What does it mean? All the citizens who can contribute to the government revenue, they can, sort out in the with the help of the tax, that is, diversity. For instance, the tax should be spread over the, when we observe industries, businessmen and services. Okay. And also uh, professions, transport systems, which includes under the canon of diversity. The diversification of tax, that is, it is a way that every section of the community or every section of the society, every individual that must contribute something to the government, that comes under the, canon of diversity. Okay. So here, when we are talking about the, canon of diversity, the benefit of diversity of tax, if any reduction in the total tax revenue, an amount of, any tax, if it is, insignificant. This comes under the canon of diversity. The another one is canon of flexibility. The canon of flexibility, the word itself, it is showing that flexibility according to that. So there is a difference between these two, flexibility and similar canon of elasticity. Elastic or elasticity. These two are very similar. The canon of elasticity, as I said, the states that it should be possibility to increase or decrease. It depend upon the government revenue. Whereas the canon of flexibility states the tax system should be flexible but not rigid. There is a flexible but not rigid. Okay. So here in this flexibility, it is needed for the, like elasticity. If the tax is flexible, it can easily adjustable for the according to the new conditions, according to the canon of flexible tax system. For example, in Indian case, the tax system is flexible in nature. Central government has replaced the sales tax with VAT in all the states which effect from the 2005. And the same indirect taxes which are comes under the GST. Okay. The another one is canon of expenditure. So according to this canon of expenditure, the tax should be based on the some principles, particularly the taxpayers accept the desirability. Based on that, this expenditure they can incur. So it implies that that is tax should be economical, social, and political advisability, so that the taxpayers need not to be no justification from the government, so they can easily pay the taxes according to the expenditure. The another one is canon of development. Last one is canon of development. So according to the canon, this tax particularly brings socio-economic development in the country as a whole. So what does it mean? The development of the trade and industry that will hamper the development. So here it reduces income inequalities. It does not slow down the investment in the country when the government collect the canon of development. So the tax revenue that should be utilized in a proper manner for the welfare of the people. So the tax should be based on the socio-economic policies. That tax should be welfare of the for the purpose of welfare of the people. So the government, particularly the developmental activities in a productive manner, but it should not be wasted for the undesirable activities. This is related to canon of development. Next class, I'll continue.